Welcome back to this channel. This is Unfiltered Forex, and I am Clement here for another episode. Tools for fundamental analysis in Forex day trading. This is what we'll be looking at today, presented by me. Let's go. Number 1, economic calendars. These calendars list upcoming economic events that can have a significant impact on currency prices. They typically include the time of the event, the currency pair that is most likely to be affected, and the expected impact of the event. Examples of sites with economic calendars: investing.com, Forex Factory, TradingView, Daily FX, Trading Economics, and many others. This is the economic calendar for investing.com. This is the one I use. This is the one I prefer to use. As you can see here, this is what's contained in the economic calendar: time, the currency, the event, and a summary of expectations and the previous numbers. This is the economic calendar. Investing.com. This is the one I use. Other calendars, I won't even look at them for today. Back to here. Investing.com, my preferred calendar. TradingView also has an economic calendar. If you don't know what TradingView is, you will know in the future. It's a very important tool. Every day trader knows about TradingView. Let's continue. Number 2, economic indicators. These are reports that track the economic performance of a country. They can be used to gauge the strength or weakness of an economy and to predict future currency movements. Some of the most important economic indicators include GDP, inflation, employment reports, and interest rates. For some economies, big economies like the US economy, there are very many other economic indicators, and they can be categorized into two: leading and lagging indicators. Leading indicators usually give the forward guidance on what these main indicators will show in the future. And lagging indicators include the GDP. The GDP is the known and most common lagging indicator because it takes a lot of time to compile data for one quarter, and by that time we are already halfway into the next quarter. As you know, the GDP is released in 3 stages. If you don't know, now you know. There's the initial reading, and then the preliminaries. 2 preliminary readings: the first one, the second one, and then the final reading. The GDP is released in three stages. It's a very lagging indicator, but inflation is the inflation is the standard indicator of how the economy is doing. The employment and unemployment reports, these are other lagging indicators. Interest rates leading. The GDP is the most lagging, inflation moderate, employment reports also lagging, interest rates are leading. But we will look at these ones in a separate video where I'll be talking about the difference between leading and lagging indicators and which ones they are and which ones you should know about. That's it. Number 2. Number 3, central bank announcement. It is important to stay up to date on central bank announcements and to understand how they can affect currency pairs. Popular central banks include the Federal Reserve, that's for the US, European Central Bank in Europe, and the Bank of England, United Kingdom or Great Britain. Don't know how they call their country. Anyway, these are the initials. The Fed is called the Fed, the Federal Reserve. ECB, BOE, Bank of England. Other main central banks include the Bank of Canada. In fact, let me show you. Other central banks include the Bank of Canada. As you can see here, this is the Swiss National Bank. This is my economic calendar. This is on this website. They are listed here. Central bank rates: the Fed, the ECB, Bank of England, Swiss National Bank, Reserve Bank of Australia, Bank of Canada, Reserve Bank of New Zealand, Bank of Japan. These are the main ones you should know about. And they have websites You can check them out. I'll leave the links in the description, but I will also have to do a separate video about these ones. Back to here. Number 4, the news. News events can also have a significant impact on currency prices. This is especially true for news events that are related to the economy or to political stability. It is important to stay up to date on news events that can affect currency pairs. This this is important for long term perspective, keeping up with the news. For short term perspective, as you heard me say in the previous videos, the economic indicators we've just talked about are the most important ones to consider. Otherwise, when you talk about the news, keeping up with the news, these are events related to an economy or political stability. The point of geopolitics comes in here. For example, when the war in Ukraine started, there was news, right? It was the news came out that Russia has invaded Ukraine, blah blah blah, and that had an effect on the oil prices because Russia is the leading supplier of oil to Europe. So you can tell a news like that being released, that's definitely going to affect some currency prices and commodity prices. Commodities like gold or oil, those are the main ones. Important news websites: Bloomberg, Reuters, CNBC, Yahoo Finance. As you know, I use CNBC preferably for the US news. Bloomberg is good for Europe, news in Europe. Reuters is good for worldwide news in general. Yahoo Finance is good for stocks, US stocks. It's good. Yahoo Finance, analyzing US stocks and news about the stock market in the US. Yahoo Finance is good with that one. CNBC, good for economic news in the US. Reuters, good for worldwide news about geopolitics. Bloomberg, good for economic news in the Eurozone. Eurozone, UK, Bloomberg. These are the main ones I use and I think are very important. Let's go to the next one. Number 5, market sentiment indicators. Market sentiment indicators provide insights into the positioning of traders and investors in the market. These indicators can help gauge market sentiment and identify potential reversals or trends. Major market sentiment indicators include the Commitment of Traders Report. This is the COT reports, as you know them. They are released by the CFTC, Commission for Futures and Trading something. By the CFTC, there is a website for that. The link will be in the description. The Speculative Sentiment Index, offered by FXCM, and the CME Fed watchtool. This is, of course, offered by the CME Chicago Mercantile Exchange. Yeah. The Commitment of Traders report shows the net positions of net long or net shorts of traders in the in the trading floors. The Speculative Sentiment Index is something just general sentiment for major currencies, major commodities. The CME Fed watch tool. This is a very important market sentiment indicator, especially during rate hike cycles. It becomes very important. During a regular period when the Federal Reserve is not hiking rates or when things are cool, it doesn't usually come into the limelight, but currently, now that the Fed is hiking rates, the CME Fed watch tool is very important. It shows the probabilities of the next hike. In fact, let me show you. This is it. This is the CME Fed watch tool. As you can see, stay up to date with the latest probabilities of the FOMC rate moves. Very nice presentation here. Next FOMC meeting is in 13 days, 3 hours, 20 minutes, and 6 seconds. Fed watch tool. This is the tool itself showing probabilities. This currently shows that 94% of the market is expecting a rate hike in the 26th July Fed meeting. 5% is expecting a pause. Going down below, you can see this is the current rate. Probability of a pause is at 5%. Probability of a hike is 94%. And Yeah, this is the tool. Separate video on the CME Fed watch tool will be released later. But for now, just looking at it from a top layer perspective, just the basics. Economic analysis reports. Various financial institutions, research firms, and forex brokers produce economic analysis reports that provide in depth analysis of economic indicators, currency pairs, and market trends. These reports can offer valuable insights and interpretations of fundamental data, such as the S&P Global and the Institute for Supply Management, the ISM in the US. As you know, earlier I had talked about economic indicators, the leading and lagging economic indicators here. Now, here at economic analysis report, these are some of the leading economic indicators that we get, and the difference between these ones and the other ones. The other ones are released by the government. The GDP is released by the BEA, Bureau of Economic Analysis. The CPI is released by the BLS, Bureau of Labor Statistics. Job openings, NFPs, all of them released by the Bureau of Labor Statistics. Those are all government websites, and that is government data. But something like the ISM, this now is the Institute for Supply Management, the PMI's Purchasing Managers Index, both for the manufacturing and services sector. These are leading economic indicators that are provided by private firms. Yeah, the ISM is not a government organization. This is a private firm of supply managers, Institute for Supply Management, consisting of supply managers. The S&P Global is another one. This is a private company, very big one. They produce financial reports, economic reports, and yeah, they give a good indicator on how various economies will be doing in the future. Let's look at that website, in fact. This is it. This is the ISM website, Institute for Supply Management. And as you can see here, these are the manufacturing, services, hospital PMIs. The PMIs are released here on the first business day of the month. Yeah, these reports are available on the first and third business day of each month. ISM Hospital PMI is available on the fifth business day of each month. So this ISM is a private organization. They release very important economic indicators about the US economy. These PMI reports are very important leading indicators. Other websites here, this is the BLS. They release the CPI. They also release the payroll numbers, the NFPs. This is the BEA, Bureau of Economic Analysis. They release these the GDP, personal income. This is the PCE report, personal income and outlays report, where the PCE is. They released that the BEA. Yeah, and I think I am done. Back to here. Let's continue. Conclusion. These are just a few of the many fundamental analysis tools that are available to Forex traders. By using these tools, you can gain a better understanding of the factors that can affect currency prices and make more informed trading decisions. Thank you. As you have seen, this was just a top layer analysis of these events. The major tools for fundamental analysis, these are tools I use every day, and if you're serious about fundamental analysis, these are the tools you need to know about. Number one, economic calendars, economic indicators, central bank announcements, news, market sentiment indicators. Number six, economic analysis reports, and those are the main ones. Stick around for the next video where I'll be talking about something to do with the leading and lagging economic indicators.